JosephEStiglitz, The Great Divide, Unequal Societies, and What We Can Do About Them. Delve into the world of The Great Divide, Unequal Societies, and What We Can Do About Them by Joseph E. Stiglitz and uncover the implications of the massive governmental response to the Great Recession. Explore the challenges of the Great Reflation and its potential to cause instability and long-term economic consequences. Discover the history and impact of inflation and fiat money, how it influences today's world economy, and the actions needed to set the U.S. on a more stable path. Understand the opportunities and risks faced by investors in an era marked by swift and significant change, and find key insights to build a balanced and diverse portfolio, tailored for the modern financial landscape.
The Great Reflation, a bittersweet response. The U.S. government's massive spending in response to the Great Recession helped avert a depression, but its long-term impact on the economy is uncertain. Dubbed as the Great Reflation, the injection of new money into the financial system evokes previous bubbles in the U.S. economy and could lead to inflation. While the government has proven its ability to prevent a meltdown, it has struggled to ensure a stable economy. The nation's growing public and private debt, a fragile world economy, and a volatile dollar signal possible disaster. A stable future for the U.S. economy requires wise and even painful economic and political decisions in the coming years. As an investor, staying vigilant to the signals of the market is crucial to preserve capital. The flaws of fiat money. The book discusses the dangers of fiat money and its link to inflation, government deficit spending, and excess available credit. It examines the history of government-issued fiat money and its effect on the economy, particularly during times of war. The book also explores the impact of delinking currency from measurable assets such as gold and the subsequent rise of inflation and hyperinflation. Furthermore, the book analyzes the consequences of abandoning the gold standard and the policy of tolerating some inflation to gain full employment, which led to global inflation as a fact of life. The author warns that the Great Reflation policy aimed at improving corporate and personal balance sheets by encouraging asset prices to increase could spiral out of control, leading to significant inflation. The Federal Reserve needs to balance tightening interest rates against not tightening soon enough, which would be inflationary, to avoid the recession that would occur if the Great Reflation is left unchecked. The book highlights the debt hangover that Americans experience due to their easy access to credit. The government's desire to stimulate spending by offering tax credits and stimulus plans contradicts the need to reduce debt. Investors should note the tension between consumers' attempts to pay down debts through savings and the government's goal of encouraging borrowing and spending. The book warns that if consumers continue to save, the economy could experience stagnation like Japan's in the past 20 years. The book delves into the balance sheet recession and the implications of converting private debt into public debt for continued fiscal deficits. The government's intervention in such a recession swells deficits when debtors use any liquidity to pay off debts and creditors stop lending. Once a crisis passes, opposition leaders use public fears about deficit spending to force policymakers to pull back before consumers totally deleverage themselves and undermine any incipient recovery. The book analyzes the U.S. budget deficit and its potential to overtake GDP in a decade, near post-World War II levels, including entitlements such as Social Security, Medicare, guarantees to bailed-out industries, and entities such as Fannie Mae and Freddie Mac. It warns that the government's ability to make funding promises it cannot keep could diminish trust in the dollar, with repercussions beyond the U.S. borders. Furthermore, growing deficit financing could inhibit growth in private investment, leading to higher public debt-to-GDP ratios. The book emphasizes the need to anticipate change accurately to make successful investments. Investing during reflation. The Great Reflation experiment has created uncertainty in the fiscal future. As an investor, your primary goal should be wealth preservation through planning, judgment, persistence, and caution. Don't follow the crowd into short-lived asset booms. Instead, make 3 judgments about which assets to hold, in what proportions, and when to change those proportions. Liquidity is essential for short-term investments. The recovery of America is certain, but its strength, speed, and durability remain in question. Proper asset allocation discipline is necessary to protect your investments. Diversification, a critical investment principle, will help you understand the possible correlations among your holdings. Investment tips for building a robust portfolio. Building a robust investment portfolio involves selecting quality stocks, bonds, the US dollar, gold, commodities, and real estate, which can yield significant returns at less risk when properly managed. The stock market, for instance, demonstrates greater returns than bonds, at lower risk, making equities a favorable option for a portfolio. The key to maximizing returns on equities is to use top market indicators, evaluate a company's value, understand behavioral finance, and use statistical data to time buys and sells. On the other hand, government bonds are low risk, but return on corporate and municipal bonds are based on their credit quality and ratings. Investors should also monitor interest rate trends to determine if inflation is on the horizon. The US dollar faces pressure from high levels of public debt and fluctuating purchasing power. However, it still remains the planet's reserve currency and an indicator for international prices. Gold is viewed as an ultimate inflation hedge and a safe haven investment. While it may not yield returns comparable to treasury bonds, it is highly valued in jewelry, industry, and art. Commodities investment presents a unique option for short-term cases as they tend to be negatively correlated with stocks and bonds and are constantly replenished due to demand. Finally, considering investing in real estate forms part of a robust portfolio. While real estate is vulnerable to market fluctuations, it can provide a stable alternative investment for those seeking to own a home. America's economic future. Modern economic upheavals have exposed the U.S.'s financial and political failings. Though the Great Reflation averted an immediate crisis, impending trends threaten the nation's economic landscape. A growing public debt and rapidly aging population are set to take their toll. America's path to renewal relies on restructuring its economy by channeling resources towards developing leading industries and reducing debt. Investors are urged to explore opportunities in commodity-producing nations like Canada, Australia, New Zealand, Norway, Colombia, and Brazil. Meanwhile, small U.S. companies employing cutting-edge technologies offer the best chance for profitable returns.
In The Great Divide, Joseph E. Stiglitz paints a vivid picture of the economic landscape following the Great Recession, uncovering the potential consequences of the Great Reflation and the government's massive spending. The book serves as a guide for investors navigating an uncertain financial future, emphasizing the importance of wealth preservation, portfolio diversification, and meticulous decision-making. Furthermore, it puts forth an essential call to action for the U.S. to invest in critical industries, restructure its economy, and reduce debt, all of which hold the key to the nation's long-term economic success. Ultimately, the book's core message revolves around the necessity to prepare for and adapt to change, in both public policy and private investment decisions.